Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 17th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Here we are post-FOMC key level here. So we have the FOMC statement and the Fed interest rate decision in the previous session. 3400.25. 3400 quarter is the FOMC key level, the 916 level, and you can see that initially price went higher, and then right when he started to speak at 30 minutes later, that's when the selling began, and then price sold off here in overnight and pre-market trading here. And now we're looking to see if we have found a strong low for the day. If not, this could only be the beginning of a very significant continuation lower. But if we have found a strong low, the early low, the overnight or pre-market low here, is 33.10 quarter, pretty strong. And right now, as we speak, price is currently testing the previous week's close price of 33.27. That's a higher low attempting to develop here in the lower time frame, say a 60-minute chart, for example, or even a 15-minute chart, whatever the case is. It's trying to hold the previous week's close after forming a strong low for the overnight session. But if we fail to hold 33.25s and we start to give out, that could open up another wave of weakness. Right now, we're only trading 83% of average range in the ES, so we still have plenty of potential range ahead. If this is only the beginning of selling pressure, this thing could really elongate to the downside. So right now, 33.25 is going to be very important. Can it hold that zone? If so, then we may begin to see this thing rally back to 3400 quarter, which is the FOMC key level above. All right, let's take a look here at the NQ. You'll see with the NQ, very similar price action as well. After the previous FOMC statement, the previous afternoon here, price went up and then sold off hard into the close. We've seen that continuation into 11,000 now. At the moment, price has just put in a new low below the overnight low or the pre-market low, and right now it's holding right at that level. So at the moment, it's holding right near support. We've been in this trading range. As a matter of fact, yesterday I mentioned how being at the top of this trading range could push us right back down as we head into the FOMC key level. Right now, the FOMC key level 11,355.75. That's the level right there. If we can find a rejection somewhere in this zone here today, 11K, then we could bounce back toward that 11,355.75 for a retest either today or perhaps heading into the weekend. Otherwise, again, if we start failing to hold above that 11.2, that's the level we talked about before, failing there opens it up to the downside. If we can't get back above 11.2, this thing could get pretty significant to the downside up ahead. All right, let's take a look now at crude oil. Crude oil had a significant move to the upside here over the last couple of days. We talked about the narrow compression day. We actually were talking about it before we got the breakout on this morning here on the pre-market video, and how we could see about a 5-handle move if this thing were to break out. And right now, if we measure the 5-day range here, because this was this was more of a 4-day range, so let's go back to a 4-day range. Double click the PivotBoss Advanced ADR indicator, drop it down by a day, click OK. And right here you'll see how it was compressed right there, and at the moment $5.11 is currently the upside 125% target, and it's really basing that off the 4-day low. So if this is day 1, 2, 3, it's off of this low, and it's saying, okay, did we stretch up to that 5 points? And that's what it's measuring right now. So we still have upside here of at least another handle to the upside from today's high being 40.39, which means if we still have at least another point above, then we can get to about 41.40 or so. 41.26 would be the FOMC key level from July 29th. 41 was the raw number we've been talking about that could be reached on this move. So that's about the target zone between 41 and 41.30. Right now we're seeing a retest. So we saw the fade after stop run day, and now we're seeing the retest after stop run. This is the ideal entry here on these lows, somewhere around 39.40-ish. If price can continue to hold 39.30 to 39.40 today, there's a good shot to continue higher into 41 to 41.30 over the next 1 to 2 days. All right, let's take a look now at gold futures. Here's a look at gold. Again, we have a very clear narrow range here. I've advised just to kind of stand aside here until proven otherwise, because we're in a very narrow range. 2000 is kind of the upper area, which has been offered here a couple of good times, and then the lower area is about 1910, and it's been bounced off of that area a couple of times, but we haven't hit that edge for nearly 2 weeks now. We've just kind of been sitting here right around the 1957.70, which is a major pivot. The 1981.70 is a major pivot, both from key ranges, and we're going to continue to build up until we get that breakout day. Otherwise, right now, it could be a lot of chop back and forth until we see directional buys. Now, one thing that tends to happen is we tend to see one big shakeout leg down first before it turns around and goes higher. The same can be said on the downside too. But if this thing were to break down hard, I would be watching for signs of rejection and maybe a turnaround. If it were to break to the upside, you want a very significant breakout day. That's a transitionary day, and then from there this thing would continue on its path higher toward the upside targets that we've put out before, 2200, 2300, and the first one would be right here around 2089. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.